Hello, everyone. Welcome to the Financial History Network's first 2022 webinar. It is one in a cycle of webinars for this academic year. We are very happy to have you all today with us. So we have the pleasure of having with us today Dr. Alberto Feenstra, an assistant professor at Leiden University. Alberto will give a paper or will talk to us about his work in progress called A Capital Mistake, Tracing the Origins of Financial Globalization in Early Modern Eurasian Interaction. And he obtained his PhD in history from the University of Amsterdam. He specializes on early modern history of finance, mostly public finance in relation to state formation. He has also published about monetary issues concerning the Dutch East India Company, which he currently expands to credit operations. So just to remind Alberto, he has 30 minutes to present. I will let him know when he has 10 minutes and then 5 minutes, and then so that you can start preparing for concluding your talk. And then we will have a round of question and answers. So that's it pretty much. Thank you.
Yes, thank you, Manuel, for this very nice introduction, and thank you for having me and giving the opportunity within the network to keep presenting despite a pandemic, which will hopefully end soon. Today, my target is, as you said, this is an expansion of earlier work, and as you will see, I will relate monetary issues to credit, which I would argue would be a very natural connection. And to do so, today, as the PowerPoint, yes, will be with me. We'll start in the city of Surat in northern India in the 1670s, so in the late 17th century. And the observation I'd like to start with concerns one of the interaction of various types of merchants. On the one hand, we have the Dutch East India Company, and on the other hand, a diseased money exchanger going under the name of Mandas Naam. And he has to settle his debt after he died, and this is done with his brother Narendas. And the VOC on the one hand and to the brothers had to find a solution for the debts that had amounted over the past years. We don't know the exact amounts, but probably the amount were substantial. For Narendas Naam owned a debt of which the interest amounted to 16,500 guilders. This was really a big amount of the time. We know the going rate, we will go there somewhat later, but this was somewhere between 5 to 10% interest, so the debt was around 200 to 300,000 guilders. To add some perspective to that figure, the VOC's initial capital amounted to 6.4 million, and the VOC shipped worth of bullion around 1.1 million guilders at a time. So this equaled about a third to a sixth of the amount that the VOC shipped from Europe to Asia to conduct its business. And this was the amount that had to be settled with one single family in one single city in northern India. So I think this gives us a glimpse of the interaction between the VOC on the one hand and local merchants and money changers on the other. So credit is really central, I'd argue, to how the VOC conducted its business there. But we really do not know that much about it. Sorry, just to give you an idea of where Surat is for those who aren't familiar with the geography of India at the time. So this is up north on the west coast of India. So the question I'd raise here is, why did the VOC actually borrow money in Asia in the first place? And why is that a question that needs addressing? And this has to do with the capital structure in Asia compared to Europe. And what we know about that is that in Europe, especially in Amsterdam, the Dutch Republic, capital was relatively cheap and abundant. And we also know from a more general perspective that Asia was actually demanding capital. So bullion, silver, the silver think thesis by Flynn and Jarrell, this is of course the most well-known expression of this idea. And on the other hand, except for the capital scarcity, the demand of capital was also fed by a lack of demand in Asia for European products. So bullion was really the key to conduct business in Asia for European merchants. So on the one hand, we have cheap capital, abundant capital in Holland, and on the other hand, in Asia, we know that capital is relatively dear and relatively expensive. So to give you an expression, this is taken from Gelderblom, Kool and Jonker, 2016. The interest rate structure of the Dutch, within the Dutch Republic, so various types of bonds and debts. But what we see is that this starts out relatively high, between 5 to 10%, but then continuously decreases and continues to do so below the 5% throughout the 17th century. I'll later present some more data on the 18th century I collected myself. So this is what we know. VOC bonds are also included in this. This generally offers around 5%. Market rates tend to be even lower already from the second part of the 17th century onwards, just to give you a sense. What we also know, and this is largely based on the work of Peter Boomgaard, is that indeed capital was much higher. So I used similar axes, so both going up from 0 to 40%. And if we saw on this chart, we hardly see interest rates above the 8 to 9%. And here on a similar scale, we see that this generally tends to be much higher for the same period. So this is really what this is the problem we're looking at. And my question is then, how do we explain this phenomenon? And this is a bigger picture of financial integration, capital market integration globally. So we have, on the one hand, already quite a lot of attention for commodity markets. But on the other hand, we tended to neglect or at least have not studied from the same perspective the financial market that also tends to balance the commodity trade. So my main research question is why, and especially how did the VOC borrow money in Asia? So how did the system really work? As said, the attention for financial or capital market integration has been virtually absent to my knowledge. Interest rates about Asia are hard to find. So we know in general that capital was considered expensive or money was considered scarce. So we have references to that, but really hard figures on how much money, how much was the cost of money in one place and the other, how did it work, is much less known for the VOC. We have two important studies by the late Peter Boomgaard I mentioned before. So this is one study concerning the 17th century, and the other one is for the period after the decay of the VOC, so in 1805. And in between, we hardly have any evidence. And as said, on the other hand, the recent book by Jan Luit van Zande and Pim de Zwart, The Origins of Globalization, really focuses on the importance of silver as driver of the origins of globalization. And this paper really looks at the other parts. So passion credits as two sides of that same coin. And I will try to show you that this is really something that that is close to each other. Financial historians or monetary historians might think this is quite logical, but this is not fully a common sense after you. So what did Peter Boomgaard especially find if we look at the VOC interest rate? Those under direct control, this was one of his main findings, tended to be somewhat lower than elsewhere in Asia. And at the same time, in Batavia, which was the capital of the Dutch colonial system at the time, so there was not really the Dutch East Indies at the time, but the headquarters of the VOC in Asia were in nowadays Jakarta, back then called Batavia, which were generally lower than those elsewhere in Asia, but this was still higher than in the Dutch Republic. He made a fine number of 100 observations, and so far I tried to explore and expand his data somewhat. Today I will concentrate somewhat on India. This might not seem obvious, but India, the Indian subcontinent, was really the important part for the VOC's trade. Around 87% of the exports in bullion was destined for some 75% was destined for India, and this was mainly in bullion. So around over 80% was in bullion of that export, and 80% of the VOC's export to Asia was destined for India, and much less to Southeast Asia, what would later become the Dutch East Indies, and around 20% still into China. So what I will do is trying to relate money to trade, money for trade, to the use of credit in Asia, and to focus at our to our period. Here we have an overview of the VOC's debt. As mentioned before, the VOC had an initial capital, and a lot of attention went to this first chartered companies using the modern corporate form, etc., etc. But the main interactions of the VOC after the initial issuance of the shares was by using debt, by issuing all kinds of bonds, and the 1670s, 1680s mark a change, since there is there are actually two changes in this period. If we look at the Dutch Republic's debt composition, we see a change from entirely relying on the bonds issued by the various, what was called the chambers, the local outposts of the VOC within the Dutch Republic, to centralized issue of debt from 1680, and the yellow bars, which explode basically in the end of our period, are the so-called anticipatiepenningen. Those were were short-term bonds issued in anticipation of the fleets returning from Asia, and then the debts were settled immediately after all the products from Asia had been sold on the Amsterdam market. And really around this period, so in the 1670s, we see this type of debt coming up in the bookkeeping of the VOC. So this is in on the part of the Dutch Republic. So something changes there in how they manage their debt locally. But there is another change which is perhaps as important. So we see for the period up to the 1670s that the VOC ships worth of bullion of around 1 million per year. So I grouped this together per decade, so it sums up to 10 million per decade. And there the VOC ships around this amount, which fluctuates somewhat. It's somewhat higher in the 1620s, somewhat lower in the 1630s. But we see this change from around 1680 when it starts increasing massively to the amount of around 6 million, so a six-fold increase to the 1720s, and it continues to be on a much higher level of export of bullion, so of mainly of silver and gold from the Dutch Republic to Asia. So I think this period is really a nice start to start this new project. So as said, a lack of demand for European products made Europeans generally quite dependent on the use of bullion or at least all kinds of precious metals to settle the trade. In fact, I'd say that if there was no cash, there was no trade. And my hypothesis is that borrowing locally in Asia was necessary to continue trade. So the assumed implications of this idea is that it tends to be short-term, temporary, and incidentally. So this was really where I started out my idea when I first encountered the borrowing by the VOC. I also think that this implies that borrowing of the VOC linked credit markets in Asia to those in Europe, but we do not immediately see convergence, but this might be a more complicated process. So a possible form, and this is quite a suggestion I'd like to explore, and I really hope to hear your opinions, is that local trading posts took up credit to pay for commodities, to pay for the purchases of all kinds of goods desired in Europe. And then when it was sold in Europe, part of the money obtained in Europe was used to redeem the debt. Part first in Europe, so the anticipation bonds on the one hand, the rest went to Asia, where local debts could be redeemed with the revenues from the sales of products in Europe. And that Batavia kind of served as a center for redistribution. Slightly differently, it might be the case that indeed, again, local trading posts took up credit in Asia to pay for the purchases of the commodities, and then that it was reimbursed with money the VOC earned elsewhere in Asia. So that this was really an Asian circuit, and that the link to Europe was quite weak or a thin relationship between the two markets. So this might both be the case, both forms might have occurred at the same time, but I found so far hints for both of these options. And this leads to a kind of alternative hypothesis. So the VOC borrowed locally in Asia to pay either directly for its trade or to finance purchase of commodities elsewhere, and all within Asia. I also found some proof for that, and we will come to that. And yes, borrowing was part of a political economy too. I find a very nice example of Siam. So just to go through a few examples I found of which inform me not just about the infrastructure, but also on how the market functions. So I found this reference about Bengal in the mid 17th century, that all money, silver from Japan was to be sent to Bengal, where no money on interest was to be had. So they were trying to find money they could borrow, probably to finance the purchase of their cargoes, but they couldn't, so they had to send over silver. So this suggests to me that local borrowing was the preferred or common option. Another example is somewhat later from Surat. Officials from the VOC say that the request from Holland, so what the directors in the Netherlands had desired, could not be fulfilled due to a lack of cash. So we can't purchase what we want because we lack the cash. At the same time, they are demanding cash from the Dutch Republic, from time to time in very specific currencies, and they motivated this request by arguing, well, this will save us the monthly interest, which was substantial. So if we translate it into an annual rate, this comes to around 20%. Similarly, Surat in 75, 9% interest is okay. So they're allowed to borrow up to 9%. Because other trading posts need the money even more, and probably it was dearer there, and they hope that capital will be sent from the Netherlands. So there are all kinds of links. And then we have this very interesting idea of some Bengal officials who argue, well, we will not wait for money to arrive from Surat, where money was probably somewhat cheaper than in Bengal. It would be cheaper to borrow in Bengal because of the time value of money. This is basically their argument. So their general idea is yes, it might be more expensive in terms of the capital structure, so the interest rate would be higher, but given that there is time value of money, shipping it from one side of India to the other side, to nowadays Bangladesh, this will still save us money, and it would be time and money efficient to borrow locally here. To add some perspective, the debts were really substantial. Just local offices had about 1 million or just under 1 million of debt by the end of the year. Batavia in a few years paid 50% of the imports in interest. So it really depended on the local credit, and as said, the references to the capital of the VOC really show how important this was. So this is an end of year debt of almost 5 million.
10 minutes.
Yes, thank you. So I tried expanding the data somewhat. This is really work in progress. As said, I've focused much more on other posts as well. What we indeed see is a confirmation of what Peter Boomgaard already found, is that the capital was cheaper in Batavia, but it also tends, but this is something I need to work on, is that it becomes somewhat cheaper in general, but also that there are still large fluctuations. And also if we compare this to the Dutch Republic, so this is again the same scale. It's not just Amsterdam where capital is cheap. Throughout the Dutch Republic, also we see that the general going rate is much lower, but quite in the same rate as Batavia was, so just under 5%. The interest rates in South Asia for our period, as said, we see large differences, but also large fluctuations. I'll skip over to that. I just want to make one point about the political economy, because I found them very interesting. Two interesting examples, but I will highlight one. That's the King of Siam in 1675. who lends the VOC 200 katis of silver. So a kati is 600 grams. So this is over 100,000 kilograms of silver that he offers to the VOC without any charge of interest rate. At the same time, the secretary to the king also lends the VOC money, but he does so with interest. So this is, to me, also kind of a expression of power by the king compared to the VOC. Some longer story we have with Mir Jumla, a local warlord in India, who has financial relationships and military relationships with the VOC, and after he dies, the VOC has this long-term discussion with his son, who actually constantly refuses reimbursements, which to me also signals a kind of political power play of relative dependence. So this is also a path I like to explore. So to come to a very, very preliminary conclusion, I think the credit by the Nunn brothers case shows already how important credit was, both in borrowing and lending. We also saw the Bengal Council's advice, and the VOC's employees already understood the time value of money. So this isn't just these were guys that knew what they were doing, which makes it all the way more interesting. Everywhere we see large differences in interest rates. So to me, this seems like scattered markets, which the VOC, I think, is connecting in a way. My hypothesis, where I started out with, was that lending and borrowing would have been incidental for a lack of money, but it seems to me, and I find constantly more evidence that this was really an integral part of the VOC's business model within Asia. So I have to prove this hypothesis to have been false. And the VOC really linked the various parts of Asia and perhaps Europe to each other. But I'm not sure whether this really signals arbitrage or what the effects were. And also there is the aspect of the political economy. And I'll leave it to that. Thank you.
We still have 5 minutes for your presentation if you want to show that slide, or
no, well, this is really kind of deepening of how this could have worked. So this is just more of the same. I think I'll really keep it to this, and we might discuss some 18th century, mid 18th century stuff later, if someone's really interested.
Very good. So thank you, Alberto, for your very interesting presentation. I recall when we were discussing the program for this academic year, we were very excited to have a work that involved Europe and Asia. So we appreciate your interest in presenting in the webinar. We will now have a round of question and answers.
Shall I stop or pause the sharing of the screen?
Yes, you can, and then if needed, you can share it again.
Yeah.
So that people can. So we will ask those of you who might have a question, a comment, to raise your hand or write in the chat if there is a question. I was really unaware of the reference to, or the importance that bullion has not been granted in standard accounts of the globalization, of economic globalization in this period. But why was it that you said that this is not a standard view in economic history.
Sorry, let me rephrase that. I think that the general idea of European dependence on bullion was quite clear, and that there is consensus about the importance of especially silver for this trade. So I pointed out the work by Flynn and Geraldus. But this is really let's say one side. So bullion as way to pay for directly for purchases is really well known. So let me be clear on that. But the use of money shipments within Asia has not been addressed so far, to my knowledge. So this is the intra-Asia trade, so within Asia, and the use of credit as part of that system hasn't been addressed as well, to my knowledge. So bullion itself has received substantial attention as such. So if I confuse people, I'm sorry about that. I didn't intend to.
Oh, no, that's fine. Thank you. So next on the queue will be Pilar Nogues and then Juan Jose Rivas. So thank you.
Hi. Can you hear me?
Yes, a bit far away from.
Okay. Thank you very much. Thank you very much for this interesting research. I have a couple of questions. One is related to the first of all, because you talk about the importance of time in credit. So I understand that you are talking about short-term credit. So this is something that I would like to clarify. If you are mainly talking about intra-Asian credit relations while waiting bullion coming from Europe. The second question is about the instrument. Are you talking about credit which is going to be supported by bills of exchange or other kind of credit instruments? And my last question is about the period of time you are considering in your research, because to my knowledge, credit started being more active mainly in the second half of the 18th century. And I would like to know too if you find some differences in credit relations in the early 18th century and late 18th century. Thank you very much.
Yes, thank you. Sorry, I'm trying to figure why I am unable to see you. Okay, technical issue, probably in a limbo between two screens. I'm sorry. Sorry, I'm not sure, Pilar. Thanks for your interest in the paper. The first remark was about the short-term character of the local borrowing, and related to the time value. So far, and this is indeed a shortcoming of the current state of research, is that the precise term of the lending is not yet known. So sources, insofar as I have been studying them now, make references to amounts that have been borrowed, but and interest rates, but not or more often not than that they do make reference to the time involved. So I know that this is an important issue, but so far I'm fully unable to see how it affected the trade. And then your second remark was about the bill of exchange. I'm not sure to what extent this is really used in the European Euro-Asian interaction. So whether they really use this quite specific, this quite European instrument, to my knowledge, but this is of course a very limited one. So if anyone can correct me, please do. This was only used within the European context of Eurasian financial transactions. So what happens, to my knowledge, was, for instance, that that some employees deposited the amounts they had, for instance, at the local depositors in Batavia, then themselves, with their bill of exchange, went back to Europe and then could cash in Amsterdam. We also know that sometimes the English and other Europeans use this system also for rivaling companies to transfer value from Asia back to Europe. But the use of the bill of exchange, to my knowledge, in interaction within Asia, I haven't encountered it. I wouldn't say that it didn't exist, but I haven't seen it so far, and I think this might have to do with the problem of a supporting institution to the bill of exchange. So in Europe, we all have these discount houses that discount these bills and all know how this work, and all have agents throughout Europe that all settle the debts through each other through these bills of exchange. And to my knowledge, such a system does not yet exist in Asia. And for the period after 1750, my research is too thin to see any structural changes to that. But the few observations I do have indicate that interests tend to kind of lower within Asia in the second part of the 18th century. But this is all I can say. I hope I answered your question somewhat.
Yes, thank you very much.
Thank you, Pilar. Alberto, thanks. So next in the queue is Juan Jose Rivas, and then Mark Deluz. Thank you.
So I'm gonna see if this doesn't collapse. Sorry. Hi, Alberto. Thank you very much for the presentation. It was very interesting. So I think that Pilar pretty much asked all the questions I had. So I'm gonna swipe home a little bit here, and I want to ask you if do you see any importance of Manila as a source of silver and the connection that it has with Batavia, especially from the 1680s in lowering the interest rates, right, in providing that liquidity. Yeah, that's pretty much the question I can come up with. Thank you.
Yeah, thank you, Juan. This is a really nice question, and the answer is no. And I perhaps should have mentioned that, since I have been looking into that for well, some time ago. I did put some time into that, and I didn't find any. And I don't have an explanation for that, at least none other than that this was really determined by the way the Spanish Empire functioned different or apart from the Dutch. So I don't know whether there was no interaction. I don't think so, actually. But in this relationship, I didn't find any references to this, and I tend to think, but this is of course very, very speculative, is that the Spanish really kept their silver to themselves as far as possible to pay for their own trade, and perhaps that even the Dutch tried to protect their own sources of silver, mainly from Japan. So I found references to copper and silver coming from Japan, which they used as a source of silver, and Europe. So this connected the Spanish silver mines indirectly, but the direct trade from Potosi to Manila was something I think that the Dutch couldn't tap into. But this is speculative. But this was rather the explanation of an absence of references. But perhaps I should dig somewhat deeper. But thank you for this question. I think it's an interesting case.
Thank you, Juan Jose. Thanks, Alberto, for answering Juan Jose's question. Next is Mark Delo.
Yes, thank you. Well, very interesting research. Now, I'm not a historian, and I know very little about this time period, so my comment might be totally off the mark, but I was thinking about this in terms of how does it work in the context of multinational corporations, the relation between subsidiary and headquarters. So if I understand it correctly, you have a situation, you have the local manager in Asia, and then you have headquarters in the Netherlands, and the local manager in Asia, he needs money, and he can get the money locally, or he can get it from headquarters. But the problem is, if he wants to get money from headquarters, he has to convince headquarters to give him the money. While I can imagine that his needs for money are, well, they fluctuate over time. So it's probably not easy for him when he needs more money to get it in time from headquarters and to convince headquarters to give him the money. So the fact that he can raise the money locally gives him more independence in what he's doing. And then when you look at it from the point of view of headquarters, if they give this local guy a lot of money, how can they be sure that he's going to use it in a correct way? While if we let the local guy borrow money locally and then have the goods shipped, and then the VOC makes money with that, they know there is a profit, and then they can pay back the debt that is locally made in Asia. So I was wondering whether a sort of agency perspective about the relationship between the local manager in Asia and then headquarters in the Netherlands would also not be part of the explanation of what you actually find.
Yes, Mark, thank you. This is this is I think the central one of the central elements, especially in this time period, since the bureaucracy hasn't developed that much. So there is indeed a principal agent problem in a way. So I'm trying to rather figure how it worked, and I think this is the this is really the framework of the paper, at least. Yes, this is a central problem, but what I also figured is that they this is actually topic of another paper, is how they try to forecast the monetary demands. So the VOC had this system. So they have the local offices throughout Asia, and there they constantly try to monitor how much money is there, how much money do we usually need. So what do we need to come in from headquarters? So basically from Europe. But they do this for around 200 years. So in a way, you would expect them to learn something over time. So I'd expected to see the amounts shipped rising much faster than they actually did. So they rise over time, especially from around the 1680s onwards. But given the much cheaper capital within the Netherlands, I would have expected that the debts in the Dutch Republic, or perhaps with this is wholly fully speculative, is even new share issues in the Netherlands. So other ways of raising money where the money was cheap, rather than constantly being behind and really having to pay the high local interest rates. So even if you don't know exactly where which amount or how much silver was needed where exactly, one would have expected the local direct or the general board in Amsterdam to at least supply a much larger amount per year to the headquarters, to the local Asian headquarters in Batavia, who might then redistribute the money where it was most needed. So yes, this is the structure of the problem, but still the question remains, why do they keep relating on this seemingly expensive system? So this is still the puzzle to me, and there is indeed this principal agent problem. Does it give any? Is it a sensible reaction to your question, or did I miss something?
No, absolutely. I mean, I think you framed it very nicely, and if you would be able to find an answer to that question, I think really great paper.
Great, thank you.
So I have a question, Alberto, on two issues. They're closely related. One, what kind of sources and where are these sources located, and how are these sources evenly or unevenly distributed between the Netherlands and say archives in Indonesia, Jakarta, etc. And then two, what are the sort of challenges you faced as I think this is research you've conducted throughout the pandemic, right? So how have you been dealing with that?
Yep, thank you. Well, the first the main source so far is called Generale Missieve, and this source is it's even online, so you could access this anywhere. And these are the letters written from the headquarters in Batavia every year to the superiors in Amsterdam. So this is the main source so far. This also has to do with a lack of quality sources for the bookkeeping records. So within the bookkeeping records, we find amounts, but we don't find much references to motivations of certain decisions. And those letters I've been studying really give this background of why are we doing what we're doing. So this kind of relates to Mark Deloof's question about the principal agent problem. So they are really trying to account for themselves what they are doing and why they are doing it the way they did it. But as said, this is kind of a one-sided. It's a good source, but it also one-sided in terms of we only see the story told by the Asian VOC officials and not much more. And for the Amsterdam debts, which is something I'm thinking of looking into, but this might be the topic of another paper. They have these large ledgers within the National Archives, which generally state the various debts of the VOC. So far, I have been looking what should be in Jakarta, but this isn't really clear whether there are really sources left for me that contain valuable information about this specific topic. That this might be a next step for the future. But so far, the local sources in the Netherlands, where most of the VOC archives are, contain most of the information, at least to make a first preliminary step towards an assessment of the capital structure the VOC encountered and perhaps also influenced within Asia. So I think that it has potential, but there are potential flaws and new steps to make as well.
Very good. So if there are any other questions, we ask the members of the audience to please raise their hands or use the chat function. And if there aren't any questions, my fellow conveners and I want to thank Alberto for his presentation today. And we also would like to welcome to thank you all for attending our webinar. So our next webinar will be on March the 14th, when we welcome Maylis Avaro presenting the paper Gold Battle, Revisiting the History of the Gold versus the Dollar Hegemony During the Bretton Woods Era. And you can register in the link placed in the chat. So thank you so very much, Alberto, for your presentation. And thank you all for attending today's session of the Financial History webinar. My name is Manuel Bautista Gonzalez, and I want to thank you all for coming today.